Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. You guys are tuned into your stocks and there's lots of queries that has come through. We're going to, address all of them. But first up, a quick look at the markets because it's really asking for attention right now. It's a 280-point move that we're seeing on the Nifty. So 1.6% higher. Like you can see, we're sitting at the day's high. So looking extremely solid there. Of course, on the back of, the news flow that came through on Adani. So both of those stocks from the larger names are doing very well. So you have Adani Enterprises, which is trading with an over 14% kind of move. Adani Ports is also seeing a near 10% move right now. And then this is having a rub-off impact on, of course, all of the financials, right? So the Nifty PSU Bank Index in itself has seen an over 5% kind of move. That is the positive sentiment kind of rub-off that we're seeing on the entire financial space. We will talk more about that. But first, let me introduce our guest on the show now. We have Shahina Mukadam joining us. She's an independent market expert, as well as Kush Bohra, who joins us. Shahina, Kush, thanks a lot for joining us. I will get to all of the individual queries, Kush, but if I can just get your call on the market and, the kind of move that we've seen after this news flow came through, do you expect this kind of positive momentum to continue as well?
Well, hi, Pavitra. First of all, thanks for having me on the show. Well, look, this is a very sharp short covering rally that we're seeing, and it was long due. I mean, after the 200-day moving average that we broke and, went lower, I think it was overdue. I don't see too much of an upside on the market, beyond, let's say, 17,700 or perhaps even 17,800. That is one level, where I will perhaps put my stop losses, if I'm short on this market, or perhaps even create short positions with a stop loss of 17,800. If the market breaches 17,800, that's where the trend will change. That's where the direction will change. And I will consider going long only if 17,800 is taken out. Right now, this short covering was due. And with the news and technicals, all of this, falling just in place, we've got the right mix and the index is up nearly 3%, right? 300 points right now.
Oh, absolutely. And what about on the banks? I mean, I'm sure you've looked at what's going on there as well. What kind of call would you take on the Nifty Bank and where do you expect that one to hold?
Very clearly, the strength was evident. The fall began much sooner, but so did the rise, right? Bank Nifty, for example, was about a 1% up versus a 1% down on the Nifty for the last week, expiry to expiry. Now, this too is perhaps, cooling off a little bit. I would say 41,800 is where I see Bank Nifty headed. Any kind of trend reversal is, should be considered only if Nifty or Bank Nifty crosses 41,800. Up until then, this still remains the rise on, sell on rise kind of a market. The texture does look a little weak right now. But for Nifty, as I said, above 17,800 and on Bank Nifty, 41,800. These are the thresholds. If markets do cross these levels, is when I'll probably change my stance.
All right, those are some key levels to track. But let's now get started and bring you all of the queries that have come through because there are a whole lot. Mamidi Venkatesh calls us from Bengaluru with a query. He has investments in LIC and he's on the line with us. Mr. Venkatesh, if you can hear me, please do go ahead. Ask us about your query because both of the guests are on the line as well and then we can help you.
Sir, I'm holding LIC shares at the average price of 600. Can I hold it or accumulate it or sold it? Please advise me, sir.
Okay, and you're a long-term investor, right?
Yes, correct, madam.
Okay. How many years would you be comfortable holding?
Madam, pardon?
How many years would you be comfortable holding this investment?
Six months, madam.
6 months. Okay.
Yes.
That's not a very long time horizon, but I'm going to ask Shahina first on this. Shahina, he did buy LIC at 670 a piece. It's closer to 615 right now. He's comfortable holding up to 6 months. That's not a very long time horizon. So considering we are working with that kind of framework, would you suggest that he stay put or get out?
Well, we are seeing a bounce in LIC now because of the developments that have happened in the Adani Group stocks.
Yeah.
I think that was an overhang. I think, but still, this bounce should be utilized to exit and probably get into some private sector, either direct bank or even maybe a life insurance company. But I believe they will lose market share over a period of time in the longer term. So medium term, I think there is a bounce and maybe closer to 650, he can look to exit.
Okay, got that. Kush, let me come to you on LIC as well. I mean, today, of course, like Shahina was pointing out, it is seeing a bounce. But for this year, it's already seen a 15% kind of cut. Considering that there's only a 6-month time horizon, what do you think is the way to go here?
So, Pavitra, on a lighter note, in this age of instant gratification, the definition of long term has changed to 6 months.
I know, I was surprised.
Well, but then, to each their own, everyone has their objectives, right? So, fair point. See, the stock has made a base around, 560, 580 odd zones and is attempting a rebound. And as China just said, there's a positive news coming in and we're seeing that reflected on the price as well. My suggestion would be to hold on to this stock with a stop loss of 580. This stock can attempt up move till 650. And if that is taken out, then 700 zones. So my suggestion would be stay put. 580 is where I would place my stop loss.
Okay, stop loss at 580. Mr. Venkatesh, I hope that helps you. That is a technical and fundamental perspective on LIC, considering the fact that, you're willing to hold only up to 6 months. But with that, let's move on to our next query. We have Praveen Gandhi, who writes to us from Mumbai. He holds 100 shares of Happiest Minds Technology, bought at 545 per share. He's a medium-term investor and wants to know whether he should hold or sell. Like you can see on your screens, he has made, good profit on this one. Happiest Minds is close to 856 right now. And the levels that he bought was, I think, around 2 years ago. Shahina, like I said, he's... Okay, I'm going to go to Kush on this one first. Kush, if you can hear me, like I was pointing out, he's definitely made good money on this right now. It's closer to 855. He bought at 545. The question is, do you think that there's room for significant upside from these levels as well?
So there is, but I think he'll be doing the fact that the stock went to about 1500, 1600 odd levels, and he perhaps didn't book his profit. So I think that's the major concern that he has. My point of view here is 800, 820 is a zone where the stock has a historical support zones. So if the stock does not reach those levels or breach those levels, the stock could very well attempt an upside. If I just look at the near-term trend, the stock is very clearly attempting a rebound. My suggestion would be hold on to this one as well. The best thing is that he's in a very neat profit despite the kind of sharp fall that the stock has seen. So my suggestion, 810, that should be your trailing stop loss in this case, since the buying price is 545, 550 odd. 810, keep your stop losses there. The stock can make an up move towards 930 and about 1000 levels, in the coming months.
Okay, so hold on for now. Shahina, coming to you on Happiest Minds, I think we lost your audio for a bit, but if you can hear me now, the viewer has actually bought Happiest Minds at 545 and it's obviously currently around 855. Do you think there's more room over here? He's a medium-term investor, so perhaps not looking at a very long time frame as well.
Yeah, so if for the very long term, I would have definitely said a hold.
Yeah.
But if he's short term to medium term, actually, as we saw the last quarter numbers, they were a bit of disappointment. On a sequential basis, it was more or less, flat, and it was below market expectations. And because the valuations are extremely expensive, very rich, any disappointment actually results in the stock correcting. What I believe now is because of the expensive valuations, for the medium term, it will be in consolidation phase. So while the long term, the digital business, digital vertical, which account for most of the revenues, is doing pretty well. So I expect it to continue growing by about 30 to 40% YOY. But to an extent, if the investor is making good money, as of now, he can partially book some profits.
Okay, you can book partial profits here. That's the call coming in on Happiest Minds. The next query comes in from Badnapuram Dharmendra, who writes to us from Mumbai again. He wants to buy 1,000 shares of Easy Trip Planners, 200 shares of Ramkrishna Forgings, as well as 100 shares of Bajaj Finance. And he wants to know when he can buy these stocks and, whether these are good picks or not. Shahina, you heard the 3 stocks that he's interested in. Easy Trip, he has Ramkrishna Forgings, as well as Bajaj Finance. These are the ones that he's interested in. I don't know how long he's comfortable holding, but say he has a long-term horizon. Do you think these are good picks?
Yeah, I think all 3 are good picks. Now, whether he should buy it right now, I believe that Easy Trip and Bajaj Finance, both are expensive at current levels. So I would buy these at dips. I think, RK Forging is, Ramkrishna Forging is reasonably valued, not expensive. So he can buy it at current levels. Now, coming to Easy Trip, basically, the company is growing at 35% plus. And the only issue why it's expensive is that, in the last 1 year, the stock has gone up by 4 times. It had, of course, 2 bonuses in the last year, because of which it has become expensive as of now. So I would buy it at lower levels, much lower levels. Same goes for Bajaj Finance. Bajaj Finance, of course, it's available if you look at current numbers, it's 7 times price to book, adjusted price to book, which in my view is a little bit expensive. on the higher side. So it'll be, it'll give him better returns if he can buy it on dips. Ramkrishna Forging, of course, they're doing pretty well and valuations are decent. So he can, in my view, with a stop loss of 250, go ahead and buy it.
Okay, that is the call on all three of these stocks. Kush, I want to come to you as well for a more technical perspective on, these three companies. That's Easy Trip, Ramkrishna Forgings and Bajaj Finance. How are these looking on the charts?
Well, a couple of them not too great, and they, both of them match with China, which is, Easy Trip and Bajaj Finance. They are a little weak on the charts. So Easy Trip would be an avoid, on my list, given the kind of supply pressure that we've seen, every time the stocks try to, move up in the last couple of months. So Easy Trip for me would be an avoid. RK Forging, yes, the structure is beautiful. The stock's always rebounded from its 200-day moving average in the last, couple of months. The only reason it went below it is because of the market pressure, and now it's again gaining traction. So RK Forging is a very clear buy. Here, my stop loss would be 250, 285, and 300 are the targets that I'll be playing for. As far as Bajaj Finance goes, well, look, the stock is attempting a bit of a rebound, but it's not really been successful. So my suggestion would be hold on. If the stock does fall to about 6,000, 5,900 odd levels and is able to hold on, that's when we consider buying. Not yet. The stock is in a bit of a downtrend even now.
Okay, got that. That's very helpful. And with that, we do have to get into a short break. So Shahina, Kush, I request you to please stay on because we have lots more queries coming up in just a bit. Stay tuned. All right, 17,612. That's where we're at on the Nifty. So just around 100 points away from that 20-day, average on the higher end. So, that is going to be a key level for us to track. By the way, take a look. In addition to the banking names, it's something like a Reliance Industries. It's up 2.7% right now in a single day. So that one looking extremely good. And a lot of the metal stocks are also coming up with good gains. In fact, this entire week, has been quite good for the metals pack as well as the real estate stocks as well. So we will talk more about that. But first up, we still do have our guests with us. I'm going to continue with the queries. Shahina and Kush are both still with us. And the next query comes in from Amit, who writes to us from Mumbai. He says he wants to purchase 10 shares of Astral. He's a medium-term investor and he wants to know when he can buy the stock. Kush, coming to you on Astral, this stock hasn't really done much, right? Over the past 1 year, at least, it's been absolutely flat. But that said, do you think this is a good level to get in?
Oh, yes. In fact, if I look at the risk-reward ratio, that's turned out to be extremely favorable. You're right, the stock hasn't done much, but, the other way of looking at this would be perhaps that this is, a consolidation phase that the stock is going through with a mild positive bias off late. So my suggestion would be that, this stock, this is a good time to, enter into Astral. Here, the stop loss would be 1875. The targets would be 2,000 and 2,100. As I said, the risk-reward ratio looks extremely favorable after the kind of, down move that we've seen in the last year or so.
Okay, Shahina, do you agree Astral is a good one to get into at current levels, currently around 1,910 on Astral? Do you think for a medium-term perspective, this is a good stock to hold?
I believe valuation-wise, it is extremely expensive as of now. So I would prefer if the investor could get in at dips, lower at slightly lower valuation. While the numbers also, if you saw in the last quarter, volumes were good. That is because they had that extra capacity that had come in place, but they were affected in terms of margins because of high raw material costs and also higher inventory write-off. So I think to an extent, numbers going forward in fourth quarter should be better, but I would prefer buying it at dips because valuations are expensive and the stock has rallied if you see in the last year and odds.
All right, that is the call coming in on Astral. The next query comes in from Arpan Majumdar, who writes to us from Kolkata. He holds 96 shares of Yes Bank, which he bought at 34, as well as 10 shares of SAIL, bought at 124 per share. Shahina, your thoughts on both of these? Of course, SAIL this week has seen quite a pop because of what's going on with the metal pack. But, for a medium-term perspective, he's not given his time horizon. So, say for a medium to long-term perspective, your call on both of these?
SAIL, I would suggest that he continues holding. I see upside from here. The third quarter numbers also were good. And I see further improvement going forward with realizations also having stabilized. And hopefully, they would have better volumes and raw material costs also should be in control. So I think it's not expensive at all. It's just about 4 times EV by EBITDA FY24. So SAIL looks like a hold at current levels. Yes Bank, I would suggest an exit. Because if you saw in the last third quarter, balance sheet has improved, but this is at the cost of their profitability. And there are some issues that continue to plague Yes Bank. So I think valuations, do not, in my view, will not see a good rally from here in the medium term. So I would exit and probably get into something like a Federal Bank.
All right, got that. That is the view on SAIL as well as Yes Bank. We also have a caller on the line with us, so I'm going to get straight to that. And Kush, I'll get your view on that as well. Rakesh Chopra calls to us from Hyderabad with a query. He has investments in Radico Khaitan. Mr. Chopra, good afternoon. Thank you for joining us and, calling in. But take us through your query. What is the kind of investment that you have in Radico Khaitan?
Yeah, good afternoon. I have about 2,500 shares in Radico Khaitan purchased at 975. And I'm a long-term investor. So what is the view of our analyst on this particular counter?
Yeah, and you're willing to hold for how long?
Maybe more than a year.
Okay, more than a... Okay, you've definitely already been rewarded for, holding on to this investment. Bought at around 575 and it's, the stock is currently almost at 1200. So Kush, let me get your call on Radico Khaitan. Good money's already been made, but do you think you should hold on even from these levels?
Oh, absolutely. And, I will combine technical and some strategy here, which is, you're already sitting on a very nice profit. So suggestion would be to hold on to this stock with a trailing stop loss of 1100. In that case, even if the stock falls, you'll still be exiting in a profit. But that said, the stock is in a very strong uptrend. I wouldn't rule out a move from, these levels to right up until 1350 and 1400 levels, given that his time frame is about 12 months.
All right, Mr. Chopra, I hope that helps you. You can hold on to this stock. And like Kush said, it is in a, strong uptrend. So perhaps this is a good one to keep in your portfolio. But on that note, Kush, Shahina, I'm going to thank you. And, thank you for taking out the time and joining us on this episode of Your Stocks, as always. But with that, we do have to wind down on this show. Remember, you can always email us your queries and we're going to keep taking them up with our experts. You guys stay tuned because Closing Bell comes up next for what's likely to be a very exciting final hour of trade for this week.